The firm McKinsey, they believe that the tokenized RWA market could reach around $2 trillion by 2030 and potentially $4 trillion if things are especially bullish. Now, there's all sorts of different assets that this could apply to, that people could do for this. It could include mutual bonds, it can include mutual funds, bonds, exchange traded notes, loans, securitization, alternative funds, generally to increase liquidity, allow for fractional ownership, provide global accessibility. So the first thing I'm just kind of wondering, and I understand that there is a reluctance to look into a crystal ball and make these sorts of predictions.
I think that the market for tokenization is still at its infancy. Essentially, what we are seeing is something like a company can maybe issue a bond, and then this bond is available on the traditional market. Somebody can purchase this bond and then they tokenize the respective bond, which just creates another intermediary in the whole process. But this is a normal thing because we need to start from somewhere. We need to start from the things that we understand. I think the really interesting part in real world asset tokenization is when, for example, companies could start issuing their bonds or their stock directly on chain. So not when we have a representation of something which is already in the traditional finance system, but something which is issued directly on chain.